Well, good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach and senior manager with Schwab and delighted that you are joining me today. I want to thank each and every one of you that both watches this in the archive, but a special thank you to those of you who show up live and bring your energy and bring the chat to life. So hello to BJ and Austin and Frank and Kevin Horner, who is with us in the chat, a friend and fellow coach. So if you've got questions, don't hesitate to ask. But to Will and Josh and Sharon and the rest of the gang, thank you all for being here. What are we going to cover today? Well, this is Trading a Smaller Account. It's an active trading class. We place lots of trades, and then we follow up on lots of trades. And so that's what we are going to continue to do today. We're going to, last Monday we looked at iron condors. Friday we did swing trades, and the week before last week we've been doing a lot of swing trading lately. So today I thought we'd go back to our vertical base and look at some long call verticals. But we also have some trades to follow up on, so we do have a lot to cover. If you are not following us in the Land of X, we're both posting content there, Kevin and I, on a daily basis. You're missing out if you're not taking advantage of that resource. My handle, Barb Armstrong CS, Kevin's Kevin Horner CS. So be there, be square. We do a lot of options trades in this class along with stocks. And just know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn, hone your skills, become familiar with the platform before you consider trading in your live account. Just know that there are some nuances and differences. Like if you have a dividend stock, no dividends are paid in Paper Money. And there isn't a guarantee that dividends are going to be paid down the road in a live account either. If the company changes their dividend allocation, but also short options will never be assigned early in Paper Money. So we get to talk about how we'd manage that if that happens, but we don't get to see that in Paper Money. So I do a super quick market overview. It's getting shorter and shorter all the time. Why is that? Because Kevin Horner does a brilliant 45-minute overview 4 days a week. And so, why mess with perfection there? So that's at the market open, 9:30. It's archived quickly, except for the Friday session where they talk ETFs, and that one is not archived. So go and check those out if you haven't done that. So we'll do a super quick overview. We're going to place a bunch of new trades and then manage some of our existing trades. One quick announcement: if you have not been to a live event, the next one will be the weekend before Thanksgiving. We're doing a market drive where we go from what's happening globally and with tariffs and interest rates and all of that good stuff right down to looking at individual stocks. We'll have the coffee on. We'll provide breakfast, lunch, and a great reception at the end of the day. We'll even pick up your parking. So, if you're wondering what to do the Saturday before Thanksgiving, here's an idea. I think you'll be glad you came. Then mid-December, we'll be in Houston for a 2-day workshop. First day, intro to technical analysis. Second day, intro to options, and that's in Houston. And then the weekend before Christmas, say it ain't so, but last year we had an event the weekend before Christmas in Miami, and it was packed to the rafters. So if you're interested in coming to one of these events, please register, and register quickly, because these do get maxed out. We do have limited capacity, and even though they're free to attend, there's a lot of demand for these. So, and I will be at each one of these along with Ben Watson and, a whole crew. So if you come to these, please come up and introduce yourself. And if you've been to one, feel free to type something into the chat to let the rest of the gang know what your experience was with it. I got introduced to the world of trading through an in-person event like this back in 2011. And look at me now, still looking at the markets on a daily basis. It was truly a life-changing thing for me. And I continue to love going to these events. Okay, so there we go. Okay, let's get out to the platform. So here's my quick market overview. The S&P 500 up 16% year to date. Over the last 30 years, on average, it's up somewhere between 10 and 11. So having a pretty banner year, hitting a new all-time high on this index today. So check one for the bullish. How about the NASDAQ? Well, the NASDAQ is up 21.5% year to date, up 1.5% today, and again, hitting a new all-time high. And the last 2 days, it's gapped up on the open and then closed even higher. So, pretty bullish on that one. How about our small cap? So this is 2,000 of the smallest companies from a market cap perspective that make up the Russell 3000. And, it hasn't hit a new all-time high today, but it's flirting with it. And it's up, about 0.25% today. And then how about the Dow? Now this index is a little different in that it's only 30 stocks, but also it's based on the price of the stock as opposed to the market cap of the company that the stock represents. And it's hitting a new all-time high today. So it's like bullish. Okay. Like, anyone want to argue on that one? I don't think so. And how about the VIX? Well, this VIX, this is our fear index. I did a little X video on the VIX, and if you scroll back another week before that, I did one on the Russell 2000 as well. So if you want some interesting facts and statistics about this index, go back and watch that quick little video I did last week. Yeah, but sitting at 16, and I put 20 on my chart when I did that video, if it's under 20, it's seen by the market as being more stable. And that there's less fear in the index. And so, we're really at the lowest end of where this has been trading in over the last year. So that's pretty encouraging as well. Now, what else might we take from this is that, as the VIX falls, we can see that prices on options might fall as well or become more affordable. So this might be a time to look at some buying strategies. Just saying. So, okay. So one of the things we're going to look at is something that we bought that hit our target. And somebody said maybe this shouldn't be called trading a smaller account anymore. Well, we started the year with 25,000. The year is not over yet. We're currently at almost 34,000. And adding to the kitty in a positive way today, was PDD. And just going back to this, we've been at this all year. But this is a paper money account. And so there's no guarantee that, by the end of the year, we'll still be sitting there. There's also no guarantee that next year will look the same. But, we're sitting with about a $34,000 account. And our position sizing rules are, if we're buying a stock, and we have a whole bunch of them here, that we aren't going to invest more than about 5,000. So you can see NVIDIA, is 5,157. That's because it's up $200. And the same thing with Marvell. We were just shy of 5,000 when we bought them. And this one here, we bought 100 shares, which was a $4,000 investment, so that we could do either a covered call, perhaps, or a protective put, perhaps. These, were so expensive, we couldn't get close to the 100. But, it doesn't mean that you can't buy a stock if you can't buy 100 shares. We bought 27 shares of NVIDIA. Okay. And these are stocks with targets. So these are swing trades. So let's look at PDD first. So with PDD, Pinduoduo, so last Monday, we bought some shares of stock and we put in a target, and the target was the previous high. So our target was 136.50. Today it opened just above that, and it's now trading at, it hit a high. It's of 137.98, almost 138. And so we got out a little bit above our target, our exit here was at 136.50. We got filled through 136.85. So we got out a little higher than what we were expecting. And so how much did we make on this? Well, if we look at this, it's pretty easy math, right? So let me just bring up my drawing tool and we can run through it. Drawing tool, please. It's been sleeping all weekend. So we ended up by $5.27 a share. We bought it last Monday on the 20th, and it hit our target this morning, at 7:31. So basically as the market opened, so 527 times 38 shares. So I didn't do that, times 38, $204. So for any of you watching the World Series, we're tied 1-1, but they might call that a base hit. And that did exactly what we wanted it to do. We're not drinking something out of a coconut in Tahiti necessarily, but if we're trying to put together a bit of a fund to go to Disney after we go to the Anaheim Market Drive, there's another $200 in our hypothetical kitty to take our hypothetical trip, like our paper money trip, right? There's no transaction fees on this. And you might say, well, what is that? What kind of return was that on my investment? And so just going through the math for those of you who are brand new, we'd say, well, we made $5.27 a share. And what was our investment? Well, we bought it for $131.58. So if I just divide that, that's about a 4% return. Not too shabby for, a 7-day. We were in and out in 7 days. And now we have our $5,000 back, that we can invest in something else. Yeah. Somebody's saying they're from LA and their low-key hope is that Toronto wins. So I was home at Thanksgiving when the national championship was going on, when the two championships were going on. And so everybody in my hometown was cheering for the Jays. And I really wanted to watch the LA Dodgers game because my son-in-law is he's from Valencia, which is a suburb of LA. And I know their batting order. What can I tell you? So I was there doing my little rah-rah for the Dodgers. So yeah, we'll see how it goes this week. Okay, so that was Pinduoduo. Now, I want you guys to participate here because we also have a trade on NVIDIA. So let's come and look at NVIDIA. And I had some technical issues. I'm still on the struggle bus there, which is really too bad because we would have bought 3 long calls. And I finally, bought the calls on Friday. But on NVIDIA, we placed a trade on Monday and then it kind of pulled back and we just did the stock trade. And on Friday, we added the long call. Okay. So that was on this day. And it had actually kind of pulled back and then came, so the stock position was up a few bucks, but not a ton. But it gapped up this morning. It's up almost $5 a share. And well, 468. So if we come and look at our positions, we have 27 shares of NVIDIA. We're up about $200. We still have a ways to go to get to our swing target. And our target is the same for the long call. But some might look at this and go, well, this is kind of a hammered pattern. And on our long call, we're up actually more than we are on the stock position. We're up $240 or 46%. And so it could continue to go up. There's nothing saying that it won't. This was more of a hammer when I looked at it first thing this morning. But my question is, on the long call for NVIDIA, do we, ring the bell? Because this is, this is an unrealized gain. And what the market giveth, the market can taketh away. Now, if tomorrow and Wednesday it continues to go up, we could end up with double the profit or triple the profit. We could also end up losing everything we've invested in the trade. So here's my question. I'm going to do a little survey, because these are the questions that as a trader you have to ask yourself. So NVIDIA, long call, and these have to be binary questions. So it has to be, it has to be a yes or a no. Do we take the money? Or, and the corollary to that is, do we wait? Now, I will tell you that one of the things that tends to characterize retail traders is, and I'm not trying to influence your decision one way or the other, is that we tend to take profits early and then hold on to our losers too long. And so we're trying to strike a balance and make an informed decision. And why am I not saying, like, should we take the money on the stock as well? Well, we've got earnings coming up, but when is earnings? It's kind of still out there a bit, right? Not till November 19th. So we have weeks. So we have time. If it pulls back, time isn't going to hurt the stock position necessarily. Like, there isn't a time decay component when we have a stock, but there is with an option. And somebody asked what strike we had. We're probably way in the nosebleeds. In other words, way out of the money. We have the December 205 call, and the stock is trading at 190. And the reason we did that out of the money call is because we can't afford to risk. If we look at the money strike for December, it's $1,300. So we had to go out further to what we could afford. So it was an affordability based decision, but it hasn't worked out too poorly for us yet. Okay. I really like what that some of the comments in here. One is saying, can we move the stop? And so with a swing trade, we put our stop at 50%. Okay, so if we come and we look at our stop on this position on NVIDIA, here's our call. Our stop is at 260, which is at about half the value of the price that we bought. So could we go in and adjust this stop, leave the target the same? I like the way you're thinking, and maybe adjust the stop to 50% of the current price. What would that be? So if we come to the trade tab, our monitor tab, and come down here and say, well, it's now trading at 760. So if I take 760 and divide that by 2, could we move the stop up to 380? Or you could say, I want to at least protect myself from a loss. I'm going to move my stop up to the price I paid, to 515, so that if a stop is triggered, it's not a guarantee that I'm going to get out for 515, but that's my request. Okay, and right now we're kind of 50-50. And so let's do that. Let's go in and adjust our stop. Okay, and we're going to adjust our stop to 360. Actually, let's adjust our stop to 515. We only have one option, so we can't get out of half the contracts, because there is only one contract. That was all we could afford. But I really like the way you're thinking. I like the way you guys are thinking on this. So we're going to move our stop up to 515. Okay, so we're going to come back to our working orders on NVIDIA. Here's our stop. And we are going to cancel and replace that. Say, hey, if it gets back to what we paid for it, now this doesn't guarantee that we'll get out at exactly that price, but we're trying to protect what we have invested. Okay, and with this one, this is a swing trade. We moved the stop up to the entry price. And we're going to compare this to the long stock position. So there we go. Now, do you guys ever, I want to do this not because I'm into self-flagellation, but because it was a little teensy bit of a bittersweet moment this morning when I thought, okay, I had all these excellent examples that I was going to do, and we didn't have quite enough time to do them all. So let's go back and look at Apple and do that long call vertical we were going to do. Well, what happened is it really moved dramatically. Like it's up $3 a share. It's only 1%, but we've got earnings kind of coming up. Well, earnings is this week, so maybe a long call vertical wouldn't have been the trade. It might have been a long call with a 1 ATR target, but you know, it's made the move now. You know, and so this is kind of a, if you are an active trader and you see an opportunity and you can trade within your rule set, you see the opportunity, you take the trade, because the next day that opportunity may no longer be there in the same way. And Lamb was the other one. We had a bit of a pennant. I mean, this is a stock that's up 117% year to date, but we had this bit of consolidation and it broke to it peaked its head above this diagonal resistance line on Thursday and was moving. But, you know, now we've got this inverted hammer and, you know, it's up another almost $5 a share today. So the message here is, you know, when you see an opportunity, if it meets your criteria, maybe delay isn't your friend. So, you know, but we only get 45 minutes and I can't just say, would you like to hang around for another 15, you know, so we can do more. So I was leaving, so Mad Notes is saying, so I was leaving an update note on the details of the edit. Yes. And so what happens is, like, sometimes we place a lot of trades and you're going, hey, I got stopped out of this. Like, why was the stop at 5:15? And it's just a note from yourself to yourself. And so, you know, and this is a reminder, oh yeah, we also had a long stock position with a swing target. And so we're just going to, you know, it's a reminder to go back and do that comparison afterwards. And no one else sees this but you. This is just a note from yourself. And this is one of the places you can see it. Okay, is here on a working order. Okay, now if the order, if you come to your order history, you can see here, this was a swing trade and we were going to compare this to the long call. But we ended up not placing the long call because I was having technical issues, which is kind of a too bad because that would have worked out nicely, wouldn't it? Okay, so let's come and look at some new trade opportunities now, okay? So first one, JP Morgan. And what are we seeing here? Well, we're seeing, you know, we had this support level and you know, it's continued to come down and bounce off this support level, or so it would seem. And then we also had a bit of a pullback. You know, if we're playing, you know, the technical I Spy with my little eye. Now, if you're newer to reading charts, you may want to join me on Tuesdays. I teach a Getting Started with Technical Analysis, which is just all about chart basics. And so we're seeing this, you know, diagonal resistance breakout here. And so, you know, sometimes it'll come back and retest, but we're going to look at doing something modestly bullish. Now, could we, this is up 26% year to date, could we do a swing trade and do the stocks and re-employ the money that just got put back into our account from PDD? We could do that. So if we wanted to do that, where might we put a stop? Well, we might say, well, here's a recent low. Or you might say, I think this line here would act as, you know, a support level. So you can do it however you want. But if we looked at that 290.54 as our low, 290.54 and went 2% below that, 290.54 times 0.98, our stop would be at 284.73. So that's going to be our stop for JP Morgan. And there, where might our target be? Well, you know, we had it opened on this day around 317. So, you know, we could trade this back up to this previous high around 318. We might want to make it 317 because sometimes it gets oh so close and then sometimes it can blow right by. So if we just made this our target, 317. And you might say, well, like, I don't have $5,000 available in my account, and this is our max position size. So if we say, well, and this is an expensive stock, it's $300 a share. So if we take our 5,000 and we divide that by 303, we could buy 16 shares. It's like, is that even worth it? Well, how much could we make? Well, if we could make $15 a share, so let's switch this to our calculator. If we could make $15 a share times 16 shares, $240. Like, we started this account with $25,000 at the beginning of the year. That's 1% of the total account value. It's not nothing. You know, it's a base hit. And, you know, games can be won and lost on base hits. You know, so, you know, if we said, okay, you know, we're okay with doing that, we're going to come to our trade tab, we're going to right click, we are going to buy custom with an OCO bracket, and our target is going to be that 317 previous high. So it's a swing trade. Our exit is going to be at 284.73. It's Monday. I don't feel like doing the extra math. So the system will actually do it for me. What do I mean by that? Well, if I come to confirm and send, it'll say, hey, you can make 14 here. If it hits your target, you're risking 18. And if you're not willing to, like that, you know, usually we like it to be 1-to-1 or better. You may want to snug your stop up a little bit, or you may say, you know, I'm relatively confident in the direction of this trend. And as long as I'm not breaking my position sizing rules, and what are they? We don't want to risk more than, sorry, let me come back here. I don't want to risk more than $500 on any one trade. So if we did lose, and there's no guarantee that we couldn't lose more, but if we did lose $18.30 a share on our 16 shares, is that over 500? No, it's 292. So let me just do that again. 16 shares times, God, it's Monday. Now I can't remember. Even if it was $20 a share, which it's not, that's $320. Yeah, somebody's asking about the scripts. Those are in the post pinned to the top of my X feed. Okay. Yes, we've got to change the share number. Thank you for reminding me of that. So 16 shares. And then if you change this firecracker to a paper clip, and then click anywhere on these three lines, it will even up the quantities. And so we can see we're investing 448.48. And what it's saying is, you know, here's our cost. There isn't a transaction fee. And the goal is to make $14 a share. We're risking $18.30 a share. And this we're going to put in our stocks with targets. And it is a swing trade. Okay. So that's JP Morgan. Now, if we wanted to do something and invest less, could we come out to November and say, hey, we're 25 days away from the November monthlies. Could we buy the 300 call $950. Well, we can't really afford that because that's risking more than 500. But could we do a long call vertical, buy the 300 call, sell the 305? So if we're buying, it will put in the next closest number. We are going to go with, a $5 wide spread, 305. So that would cost us $280. So now we're risking $280. The account is up. So if we said, well, we could risk up to $560, we'd be okay with that because we could lose the entire amount. We're going to put in an exit at a 50% gain. So if we say 280 plus 140 or 280 times 1.5, if this gets to the point where it's worth 420, we'd like to take our profit and take the money and run. So we're going to say when this gets to 420, and we're leaving $80 a contract, quote unquote, on the table. And what do I mean by that? Well, the most we could make on this is now at 288. So the most we can make on this is $5 less, which is the difference between the strikes, less what we're paying to get in. And we're saying we don't need all of that. If we can make 50%, we don't want to be greedy. We'll be happy campers. So we're going to make that good till canceled. Because it's saying here, we could make $424 in total. We could lose $576. And so if we're okay with that, but we're saying, hey, if we can make, about 280 of that 424, we'll be satisfied. And if this goes to the point where it's down 50%, we'll exit. Now, the reason we're not putting in an OCO order for this is because sometimes when the market opens, there can be a lot of volatility. And I've had the unfortunate experience in my personal account of getting stopped out because it hit my exit for way more than a 50% loss. And then the market settled down and I wouldn't have ended up out at all if I hadn't had that exit in. And so I'm trying to create a way of looking at trading that might work in a live account were you to trade this strategy. Now, what's the downside? The downside is you may be off busy doing your life and you're not looking at this and, you miss getting out when you should have. And we've done that in this class. But, so an OCO order is a one cancels the other. So we've put in our target, we didn't put in the exit. In the last example trade we did an OCO order in that we put in both a target and a stop loss order. So that's what that is. Okay. So, and then we're going to compare this to our long stock swing trade and just see how they play out. Okay. So we've done 2 trades on JP Morgan. Let's look at Triple M. Now, Triple M, we had as the stock we were looking at fairly frequently earlier in the year. We haven't looked at it so much lately. It kind of set up this inverted head and shoulders pattern. I call this a bit of a Tums chart in that, if you owned it, you'd be eating Tums because it would be creating some anxiety. But did you see this? Do you see this like inverted head and shoulders pattern? And then it broke out and then it continued to kind of go back and forth through the line, set up a bit of a pennant. But then, man, it really took off on earnings, had this huge update and has kept on going. So this might prompt you to look at the news, and we certainly don't recommend that you just make all your decisions based on charts. So if we go back to October 22nd, Wells Fargo increased the price target on this to 183. Mizuho raised their target to 160, Citigroup to 180, Barclays. But, so the prices aren't the same on all of them. Here's a Deutsche Bank, raised it to 199. So could we look at this and say, well, we could have, this is a bearish Harami setting up here, perhaps, in that, well, it could be we just had a one-day pullback, and because this candle is bullish, that could be the end of the pullback. And you might say, well, I'd like to wait. But, what we could do on this is say, well, given all the positive sentiment we're seeing here, maybe we go out to December, we give it some time if there is a pullback, and maybe we could do the 165 and the 170 if we were to do a long call vertical. When I say it took off on earnings, you saw that we had an earnings announcement here on the 21st. And it moved how far in one day? So if I take my drawing tool here and change it to this, we go from, it closed here this day, the next day it was up $11.86 a share. So it took off, and then it kept on going. And so since that earnings announcement, even with where it is right now, it's up about 10%. It's up $15 a share. So, that's not nothing. And the analysts are tripping over themselves, it would appear, to raise their price targets. And Argus just adjusted their target today from 160 to 190. That's a big jump. 190, we can't even see that on our chart. It kind of tops out at 180. And so if we're bullish on this, but saying, given this chart configuration, it could pull back for a few days, we could come out to December. And so usually we're looking in the 20 to 50 day range. So this is out a little further. But, when we look at this, if we did the 165 and the 170, and it's almost the whole way through that already, we've got lots of volume on the contracts. We've got a relatively tight bid-ask spread. So the downside of going out this far is it tends to take a little longer, or it can take a little longer to hit our target. We're paying $290 to get in. So how much can we make on this? $210. But if you said, well, what's $290 times 1.5? That's $435. So if we say, okay, we're going to do just one of these, first trigger sequence, right click, opposite order. When this gets to, or if it gets to 435, I'd like to take the money and run. So, and that's about $145 less transaction fees. Yeah. So confirm and send. How much could we lose? $293. How much could we make? 207. We're saying, hey, we can make 150. We're great with that. We're going to put this in our long call vertical. And because it might pull back, and we're trying to give it room for that, we're giving ourselves a little more time. And that's the thought process behind it. And others might say, with all the analyst reports, and, these are just human beings, and here's one, RBC raised their price target to 130. And then we've got other people raising it to 160, 180, 190. Who's right? Who knows? And they could all be wrong. But these are people whose careers are based on their looking at this. So there we go. Okay. Now, I've got to start wrapping things up, but let's look at Dollar Tree. This is one that, it's interesting as stocks go through different phases. So, up 36% year to date, which is pretty bullish. It's outperforming all the indices, but, it had this big pullback. But, since then, it's come back across the 10, the 30, and it's approaching, it's approaching the 200. And the 200 hasn't really been acting as a resistance or a support level. And so some might not be too concerned about that. But here's the one thing to keep our eye on, is that it's kind of coming up to this where it started falling from the gap. So some technicians might say, you know, I see that we've had this rally, but I'm going to feel a whole lot more comfortable once it breaks back above this candle. And so maybe we'll come back and look at this one again on Friday. AVGO. You know, here's another one, you know, up 52%. So it's been very bullish. And could we do another long call vertical? And the answer is, yeah, we could. You know, and so if you wanted to continue practicing that long call vertical strategy, this might be a place to look. If you have not subscribed to the Trader Talks channel, I don't know what you're waiting for on that. You're going to want to do that. You want to go to Trader Talks from Schwab Coaching, and that's on YouTube. And when you get there, if you're saying, because somebody asked me a question, you know, that watched this in the archives, and they said, you talked about when you started trading, you created a checklist. Yes, nerd alert. My brother was teasing me about being a nerd as a kid, you know, when I was home last week. So guilty as charged. But how did I create those checklists? I had a trading plan for every strategy I traded. And then I would, from that, create the checklist. And so if you know, go through and look at this trade management mini session with this example trading plan from which you might create, you know, it's a template for you to create your own trading plan. You know, what does it say? Does this stock trade 1 million shares a day or more? Check. Is the market uptrending? Check. Is that sector uptrending? Check. So you've got check, check, check. Are the options heavily traded? Do you have volume on the options? Check or not check. Is there a tight bid-ask spread? Check or not check. Do you have a technical entry? Is it breaking? Is there a diagonal breakout, a horizontal breakout? Is it bouncing off a support level? You know, either check or no check. And then you go through your position sizing. So you can create a watch list from any of these. Okay, and stay tuned because there will be more of these to come. Yeah. So guys, that is a wrap for today. I want to thank Kevin for his help in the chat. He's always great at helping out. There are a lot of guys behind the scenes, guys and gals behind the scenes that help bring this webcast to life. If you haven't subscribed, make sure you do that. If you hit the like button, it helps move this up in the algorithms so that more people can find this content. There isn't a survey today, but when there is a survey, one of the things that I am frequently asked, let me just bring this up, is to review what we did. And so what we did today, we reviewed the position that hit our target on Pinduoduo. We decided to stay in our long call on NVIDIA. We were about 50-50 on that, and we moved up our stop. And then we placed a long call vertical on JP Morgan. We also had a stock position on JP Morgan that I'll make sure fills. And then we did a long call vertical on Triple M. So guys, I hope you have a really awesome day. Take care. Up next is Mr. James Boyd. You'll want to stay tuned for that. And tomorrow, please feel free to join me for getting started with technical analysis, and then check out what Kevin and I have to offer on X, Kevin Horner CS, Barb Armstrong CS. Take care, and we'll see you tomorrow. Bye for now.